Hello and welcome to the Wendell Effect for the 29th of January 2023. This is Brandon Wendell with you as usual. Just a quick reminder, we are not broker dealers or investment advisors. Going to take a look at the information here from an educational standpoint, not telling you to buy, sell, or hold any particular securities, giving it personalized recommendations. Past performance, no indication of future results, and there's always risk involved in the markets. You can always stand the chance of losing money. No matter what we do, we can't eliminate it. We can only try to minimize. And we're not subject to trading restrictions here at TMO, so we can have a position in security and initiate one at any time. I want to welcome everybody here again, and if you want to stay in touch with me, you can reach me at brandonwendell.cmt@gmail.com. Also, hit me up on Twitter at TraderBW. You can follow me there for regular updates on the markets as well, and of course, follow us. And don't forget to hit subscribe and like, and set up alerts as well, so that way you can follow us here on the Wendell Effect on YouTube when we have new videos posted. So for the last month, to kind of keep an eye out on what's going on here, you can see the banking sector has gotten a little bit weak. And we talked also about the possibility of some weakness in the Nifty coming up this week. And looks like we got some strength in technology, consumer non-durables, but for the most part, a lot of red on the left there. Going into this is last week, and actually I forgot to move this back a little bit here so you can see see if I can get that showing. There it is, last week. Anyway. You can still see a lot of red on the financials, so for the most part that selling off was pretty recent, and Reliance took the market down a little bit as well, and obviously Infosys and Wipro didn't have as much strength as we had previously. So taking a look at the Nifty, if you look at the seasonal move this week, actually a little beyond, for the next couple weeks, from January 29th to February 15th, 64% of the time over the last 25 years, this couple weeks have been pretty bullish. Not huge. I mean, the average return for those 2.5 weeks, or 2 weeks, I guess it is 1.64% rate of return. But overall, we might see a little push back up. We'll have to see if that continues to be the case. Now, going into the charts of the Nifty, you can see on the weekly, we did our retracement, and last week we broke down to 61.8% retracement of our previous impulse as we kind of broke out of that sideways movement. We're still bullish. We haven't gone into bearish territory. We've lost a lot of momentum, though. Looking at the daily chart, we are seeing that this may be a new bearish trend developing. We've gone into bearish territory, as we've done before. What came out of that last time when we went below 40 on the RSI was really just sideways recovery. So it could be that we get a little bounce and become sideways motion again, but really kind of hovering between 18,000 and 17,500. So we may get caught in that range for a little while. It doesn't look like we're going to keep sinking, but there is that possibility of dropping a little bit further. You take a look at the 4-hour chart, and the impulses are definitely down. You can see that when we rally and make highs, we're not getting above 60, which is extremely bearish. So we just made an impulse down 61.8% of the preceding impulse after we broke out of that sideways move. So there's a possibility if we do break down our next target, it's funny, it lines up with the retracement of 78.6, but also duplicating the previous impulse down. And that's going to put us right around that 17,200 area. So keep an eye out for that. Or again, if we go sideways, we could get stuck between 18,000 and 17,500. Moving on to Reliance, one of the big powerhouses, if you will. You can see that this is actually somewhat bullish this time of year. January 29th to the 19th of February, you get a little bit of bullish activity. Average return to almost 1.5%. So we could see a bit sideways movement before we start to bottom out. That's what that's saying on Reliance. And it may end up becoming the trajectory for the Nifty as well if it goes a bit sideways before it starts rattling a little. Looking at Reliance on the daily chart, you can see it's impulsing down. We made our first impulse and balance at 61.8. We just paused at the 100% duplication of the preceding impulse, but that's just at a Fibonacci extension. The next real demand is still a little bit lower, 2250, that area. So if we do see more weakness coming in, it does look like we're pretty weak. We've been below 40, and looks like if we do rally, this may become a selling opportunity at 2450 to move down to 2250. So unfortunately, Reliance is looking a little bit weaker, even though seasonally it normally doesn't move as weak. Looking at TCS, you can see it's kind of 50-50. We just usually go a bit sideways over the last 18 years. The majority of the time, we haven't gone anywhere. We've gone sideways, up and down, no, just kind of sideways, no return. Looking at the chart itself on the daily basis here, we are still impulsing up, just very, very slow. You can see that we had an impulse correction. We're on our impulse again, but it's taking a long time. We're not even making it up 61.8%. We're about 50% of the preceding impulse right now. So it looks like we're going to get more of the same, just kind of sideways choppiness, but slightly bullish. Looking at Infosys, another big name, you can see that we've retraced 50% of our previous move down, and it appears that price is trying to push back down towards the 1430 area. That's our first target. Then if it keeps getting weak, we can go all the way down to 1342. Part of the warning of this was when we went below 40 and can't get above 60, that's a negative divergence as well, where prices made a new high without the indicator making a new high, caused the prices to push back down. HDFC Bank, it does look like it should be a little bit bullish, even though it wasn't for the past week. It looks as though from the 29th of January up till February 13th, you get a little bit of a move up. 3.25% overall, and 60% of the time for the last 25 years. So the odds are on our side for a little bit of a rally. However, you can see it was kind of a false rally that broke us out of the previous move, sideways move, and we've gone right back inside that range. So unfortunately, yeah, we had a little bit of bullish activity, but it doesn't seem to want to follow through. It appears almost like we might continue to go a bit sideways between that maybe 1575 to about 1675 range. Going on to the Bank Nifty, you can see we are in a retracement right now. So we had a nice impulse up, pulled back, new high, and are now pulling back quite dramatically. We still haven't bounced yet from any of the Fibonacci retracements, but we can look for a continued movement down towards the 39,843, potentially even lower to 38.5. So we'll see if that's where we end up stabilizing. There's a little bit of demand there. You have kind of drop base, and there's your rally right at that 38.5. So that's where I'd look to see. Now be careful, because if the RSI is below 40, then you'll have enough momentum to continue down potentially to the next demand right here at about 35,500. If actually, I'm sorry, it's less than that. It's 35,300, somewhere in that neighborhood. Now, if we get to this 38.5 and we are not below 40 on the RSI, then yes, we could get a bounce in that area. Dropping this down to the daily time frame, you can see on the retracements we actually have a little bit of demand, and that's at 61.8% retracement, a little bit lower, about 36,800 we'll call that. So keep an eye out. It all comes down to the momentum. Right now there's enough bearish momentum that we should collapse below this 50% retracement down at least to 61.8, if not more. Going all the way down to the 4-hour chart, and we can see that we had impulse down. We have been correcting a bit sideways before impulsing down, and our next target is 39.5 to the downside. There's also a little bit of demand that correlates there. Rally, base, and there's your rally. But that may just be a pause before we continue lower. I'd be looking more at those daily and weekly zones to tell me where the market's likely to bottom out. As far as new trade ideas, kind of light this week. We are following up with the one we had last week, which is Tata Steel. And you can see, unfortunately, prices never came up into the supply zone. Be careful. We do have earnings coming out very, very soon. And you don't want to get caught in front of those earnings on the wrong side of that. So you might want to wait for the earnings release. Maybe that's the catalyst that drives prices into the zone, so that way we can get short and watch that drop. So that's what I got for you this week. If, again, you want to stay in touch with me, go ahead and email me at brandonwendell.cmt@gmail.com. You can go ahead and put in your requests of things you'd like to see me talk about in these videos. Don't forget to hit subscribe and like as well, so that way you'll be notified when new videos come out. And until next time, trade safe, trade well, and take care.